Welcome to the True Wealth Project, where we talk business, real estate, and lifestyle on your way to building a wealthy life for generations to come. I'm your host, Sam Carey, and I hope you enjoy the show. Hey everybody, welcome back to another episode of the True Wealth Project. I'm super excited to have our guest here today, Taylor Koo. I'm your host, Sam Carey, and this episode is going to be amazing. We're taking a little different approach from what we've been talking about thus far, and I just can't wait to hear Taylor and what he's got to offer here on our show here. So, Taylor, welcome, and thanks for joining us, man.
Yeah, thanks so much for having me on. I mean, it's a pleasure just being on the True Wealth Project. I mean, We've been talking for quite some time now. I mean, from the time that we've met, and so now to see this becoming to what it is, I mean, it's I'm just really excited to be here.
I'm very lucky to have you as one of our I want to say the OGs, but definitely like the top 10 for sure. So I'm looking forward to this for sure.
What do you want from me?
Yeah, we'll get there in the next episode.
Fair.
Anyway, so just a brief background on Taylor, and I'm gonna probably not do a really good job, so just bear with me, and I'll kick it over to you as well, Taylor, and to give us a little more detail as to kind of what you're about. So. Taylor Koo was born and raised in San Francisco Bay Area here in California. Awesome place to live. And now he's in Sacramento. He graduated with a degree in mechanical engineering, bachelor's in mechanical engineering from Loyola University in 2017. Right out of college, he began his career overseeing construction for a general contractor building multi-million-dollar restaurants such as Din Tai Fung. Hopefully I'm saying that right. And others in Southern California. Yeah, this is pretty cool.
Thank you.
He lost all of his jobs due to COVID. Oh, wow.
That was my favorite part. That was
a
really cool part.
But I always wanted to get into commercial real estate syndication. He started a podcast to network with other multifamily investors with a goal of going full-time into commercial real estate. Now, Taylor is currently an investor relations associate with PassiveInvesting.com, providing a high-quality, seamless, and enjoyable investor experience, all while raising over $15 million for multifamily storage and express car wash assets. In his spare time, he enjoys hip-hop dancing, and I know we talked about that, so I do want to get into that at some point. Basketball, snowboarding, traveling, and reading. He's a diehard Golden State Warriors fan. As a fun fact, he actually performed on Jimmy Kimmel Live as a backup dancer for Vic Mensa and Travis Barker. Did I say those right?
Yeah.
So cool. Dude, I've known you for a minute, but every time we talk, I feel like I learned something new, which is like incredible. So welcome. So I'll kick it over to you. I know I gave a brief history, but just tell us a little bit more background about kind of where you started and how you got here. I would love to hear your story from your point of view.
Yeah, absolutely. I mean, so if you were going to take it back to the reasoning of why I wanted to go into construction, as a broad basis, I thought I could leverage construction into eventually owning real estate. And I very quickly realized that building restaurants didn't really help me acquire any form of real estate in any way, shape, or form, just because of how many nuances and how niched down that the restaurant space is. And so, I think especially throughout that time too of building restaurants, there was a lot of learning lessons to realize my strengths and weaknesses. And I think I spent so much time focusing on my weaknesses during that time where I just wasn't actually leveling up my strengths in any way, shape, or form, which I feel like is building relationships, sales, and negotiation. And so it was a challenging time. And so in a way, us losing all of our jobs, I know I joked about it a little bit earlier that was the best time. Honestly, it was a sort of divine intervention to really take a step back and reevaluate what I truly do enjoy. And when I say, even though I was managing these restaurant projects, like for these like pretty big franchises like Din Tai Fung and Heidi Lau, I was just so bad at it. Like, I remember there was this one
Wow.
door. It was a custom door that I had to, I took takeoffs for. And so
Yep.
I got all the measurements, and then I just, the lead time to have these ordered was probably a 3 to 4 week lead time. And so if I didn't get those measurements correct, it would push the project back. And what do you know? I didn't get the measurements correct, even though I measured it 4 or 5
wow.
times just to make sure. And this is already like a year into just being and doing that full time.
Yeah,
And so, I think after learning all of that, I knew I wanted to get into commercial real estate, though, and sort of bypass the single family. And actually, I was thinking about this before we started recording, about just why I wanted to just make the shift and the jump from single family over to commercial, primarily in multifamily. When I first started, and I have a few good reasons and a few bad reasons as well. I guess I can, with the good reason is, all of it makes sense, right? When you decide to try and scale up a little bit quicker. I mean, for me, it made sense that these buildings were less, like, acquiring these buildings was a lot less emotional. They were based on their net operating income, based on the cap rates. And so there was less emotions that really dictated the value of the building. The economy, you can capitalize on the economies of scale, and diversifying your risk across several residents. And so it really just made sense from an analytical approach to at least make the jump. And then when I realized that even people that have been in single family for so many years try and make the jump years later, I realized that there were just two completely different strategies that, you could definitely do well in one versus the other.
Yeah,
but
absolutely.
I just decided to try and make the shift. And when I made that decision, it was, let me talk about the bad reasoning, is because I think that so many people wanted to jump into commercial real estate and they didn't. And so I was like, hey, I kind of want to see if I can do it. and that's really it. And the challenge, and then this is sort of the funny part about this whole story, is I made that decision when I was still living at my mom's house and had literally nothing to my name. So trying to figure out how to navigate and make my way into the commercial real estate space was really fascinating, especially during COVID. And so as I decided to make that decision, that's when I decided to start the podcast, network with other industry professionals, because no one would talk to me for an hour of their time unless I said I was recording it. And then also gave them some social media graphics and snippets, and eventually made my way towards now doing investor relations with passiveinvesting.com and being the main point of contact for investors, and then also raising capital.
Yeah, that's awesome. And like there was a lot there, and I feel like we could talk hours on what you just said. But we're not going to do that. I do want to pick a couple of points that's super important, right? So first and foremost, right? I mean, recently, based on when we're recording now, right? We're just early Q2 2023, right? We're still seeing a lot of layoffs and tech jobs and things like that, right? So during COVID, to your point, there was a lot of that going on, right? People losing their jobs, and we're seeing it today in a lot of tech jobs as well. Some of the folks that I come across that are going through similar situation, the first thing I say is congratulations. It's probably one of the best things that'll ever happen to you. I was lucky enough that, I kind of made that decision on my own, and, just kind of decided to jump into real estate on my own. And it wasn't forced on me, if you would, right? But I mean, there are situations in life where, things happen, right? And that's kind of that turning point of like, what are you going to do about it, right? Are you going to kind of step back and play it safe and be comfortable? Or in your case, right, you're like, I'm going to follow my passion. I'm going to go after exactly what I want. And this is the time, and this is exactly what I'm going to end up doing. So really awesome. Congratulations. And that was pretty cool.
Yeah, and congratulations to you as well, because that shift happened pretty recently. And I think that was also one of the, and you bring up a great point with the difficulty of doing that is where, I mean, you were making solid money. I mean, you had the benefits. I mean, you have a family, and so being able to make that shift and sort of step outside of your comfort zone, but surrounding yourself with similar individuals in similar situations with similar mindsets. I mean, it's a leap of faith, right? I mean, you really have to have confidence in what you're doing, and so I always commend people for taking that jump and really believing in yourself, because I think that's really the only way that we can grow is really just betting on ourselves.
Yeah, absolutely. Second is many of us, and talking to folks across the industry, right? Many of us kind of start with the single family, smaller stuff, right? Just because that's it's around us, it's all around us, and that's what we know best. Just buying primary residence, or we've lived in homes that our parents owned and things like that, right? But just the fact that you're like, no. Right. I'm just keeping it very analytical, very unemotionally, or, attached, if you would, right. In your words. I love the fact that you just looked at the numbers. This is commercial real estate is a business, right? It's not a buy a single family home, put a tenant in, and they pay rent, and hope that the market rides up and equity in the property goes up, right? I mean, it's a business, right? It's a different mindset and different way to look at housing, if you would, right? And I love the fact that you kind of made that decision early on and you went for it. Tell me a little bit more about that, just because did you have an opportunity to get into single family and didn't? That's really fascinating to me, just because, like I said, most of us start off small and then kind of graduate to some of the big stuff, right?
Yeah, so I had a small stint in single family, and I even had my realtor's license. And so I had a family member that was in the industry that did very well as a broker. And so I was cold calling. I did, I think, 1 or 2 open houses, and then I even showed some clients around for some of his listings, and And to be quite honest, I think it was just a little bit too emotional. Granted, I know that people make emotional decisions, even though, even in commercial real estate, right? I mean, investors are still going to, no matter what the numbers actually say, people are still going to need to trust the people that are behind the actual deal.
Absolutely.
And people are a lot more emotional than we think. I mean, we're not just transactional human beings. We make decisions based on our emotions. And so if we're going to take it from going back to single family, if we're going to take a step back and just realize how these properties are valued, one of the main points that I just didn't necessarily like was the fact that somebody down the street could be going through a pretty bad situation. Maybe there was a divorce, maybe there was a death in the family, or maybe somebody died in the house that could really bring down the value of your house. So on the single family side, I mean, these homes are based on their comparables. Based on what the house down the street is selling for. And the fact that I couldn't necessarily control that, and actually this is a nice lead into some future questions there. The fact that I couldn't necessarily control that aspect of the business, and not saying that I'm looking for control in all different ways, but that was one of the ways that I didn't necessarily like about the control within the single family space, is that somebody down the street could have severely screwed up my comps.
Yeah, no, that's a great point. I mean, it's we want security, not just for ourselves, right? Obviously for those around us, but also for our money as well. We've worked hard for our money. We want to make sure that it's safe, secure, as much as possible, right? And just kind of piggybacking on what you were just saying, right? I mean, I do want to talk about that control piece, right? As active investors, right? There's a lot that we can control. Obviously, there are some things that we cannot control, like the economy, the interest rate rising, even sometimes insurance, property taxes. There's a lot that we may not be able to have full control over, right? But there's a lot that we do have control over, and that's one of the benefits of being in real estate, especially commercial real estate. Looking at it from a passive investor, looking at it from someone that's providing, the equity for our deals, right? From that point of view, as you talk to your investors, are there things that you talk about that, there are things that they can control from their side, right? I mean, we talk about passive investors. They're essentially, like I said, providing equity into the deals, right? They're relatively passive, right? I mean, they do have to do some due diligence up front, but they're relatively passive, right? But are there other things that they can do to kind of control, to have some control, right?
Yeah. So, especially within syndications, and I feel, and with syndications, that is one of the downsides, is the lack of control that you have within the deal. But even if you take a step back,
as a passive investor, right?
As a passive investor, yes, yep. as an LP, as a limited partner, yep. As a passive investor in these syndications, there is that lack of control. But I mean, if you even take a step back and take a look at some of these other investments, these traditional investments that people have, such as investing in the stock market, the idea of control, it sort of varies. It changes because I think the common reasoning behind, when we think of control, we think of just being able to control whatever we can do with our money. But if we're investing in the stock market, investing in Tesla, we think we have control over our own shares, but we really don't. I mean, Elon could do something crazy, and then all of Tesla stocks could just drop, and we don't have that control there. But the fact that you can be able to pull your money out, it's then I guess that could be control, right? But the whole idea with control, though, I wouldn't necessarily say it's about just controlling your destiny and controlling the results that you're going to be getting, but it's more about the idea of trying to mitigate your risk as much as possible. And now bringing this back into being a limited partner in syndications, which you traditionally don't have, as a passive investor, have control of how the asset is operating and some of those larger decisions to make sure that the asset is performing to its projections and pro forma. There are still ways that you can have control within the deal. And one of the first ways is actually, as silly as these four ways are, I mean, one of the first ways, it seems like it's like right in front of you, but it's really just analyzing what your own goals, and if that aligns with the person that you're investing in. Because I mean, I don't think it's necessarily enough to say, hey, I'm just going to invest in this because I'm trying to get the highest ROI on my capital. You want to make sure that your goals are aligned with the type of deals that are going out there. If you are needing more cash flow and that supplemental income in an LP deal, it's probably best that you don't invest in a development fund where you're not going to receive any cash flow until way later, right?
Absolutely.
And then you can even take into account, in terms of goals, the risk tolerance that you have. Maybe you want to be in a more conservative asset class versus a newer asset class that doesn't have the historical data behind it, that's more alternative. So, taking into account what those goals look like, especially taking into account where you are in life and what you currently need, you can control that, and that can also help dictate what you're going to be investing in later, right?
Yeah, absolutely.
And if we're going to go back even to the liquidity portion of it, I mean, maybe these syndications aren't really right for you because you need access to that capital, where in these syndications, your funds are typically tied up anywhere between 5 to 7 years. So
yeah, absolutely. I mean, I think that's a great point in just analyzing your goals, right? I mean, I don't think many people look at it that way, and that just thinking that kind of looking at it from the other way, as opposed to thinking about what they're trying to achieve, right? Is including myself when we first started, right? Is like, what does this investment have to offer in terms of returns, right? But it's not so much how does it affect me, and how does it impact me? How does it benefit me? Right. I mean, I've when I first started, it was like the shiny object, right? It's just like, that sounds good, I want in, right? As opposed to,
Right.
that sounds good, I want in. Does it help me achieve my goals, right? And of course, over the years, we've been able to kind of refine those goals and be able to kind of get aligned with our investments. But yeah, I mean, that's an important point to take away for sure.
Yeah, yeah. And leading into the second way that a passive investor can control their destiny, for lack of a better words, is you get to choose the operator that you're going to be investing in. It's not like these operators are putting you into a room and making you invest your capital into their deals. I mean, you really get to decide who you trust, who you know, like, and trust. You get to decide the track record that you're going to be investing in, whether that's a good track record or a bad track record. I mean, more often than not,
better, right?
Yeah. I mean, hopefully it's better. I mean,
right.
If you're investing with someone with a bad track record, I mean, you have a pretty high tolerance for risk. So, and just make sure you know what you're doing. But there are so many operators out there that you just need to start to build the relationship with, and you get to control what that relationship looks like, and you'll figure out what type of deals that they're investing in, what type of markets they're investing in, how well they are in communicating to their investors, and really just start to build that relationship. Because in a way, I mean, these deals are very much so set up like a marriage. I mean, if you're going to be tied down for 5 years, you're going to want to make sure that you're dating slowly and figuring out all the ins and outs of their business to make sure that you know, like, and trust them with your hard-earned capital.
Yeah, no, that's absolutely right. I mean, there are countless ways, that you can certainly vet an operator, for lack of a better term, right? I know, right. We talk about that a lot, but in my mind, it's probably one of the more important parts of what we do is, vetting essentially who's going to be on the team and who's going to be managing the asset. Just because it's there's one thing to kind of close on the asset, but then on the operation side, on the active team that's going to be managing the asset, it's important. You got to, like you said, know, like, and trust them to be able to kind of feel comfortable getting into these deals. So that's an excellent point.
Yeah, exactly. And especially with how popular this space became in the past few years. I mean, you definitely had a lot of new operators out there that, arguably could say that they bought at a really nice price point, but that management portion afterwards plays a significant role in how the property is performing.
Yeah.
And so, making sure that, since these are businesses that we're buying, making sure they have a background in business. I mean, making sure that they have passive investor first returns, such as like the preferred return or different performance hurdles, just to make sure that their skin is in the game too, to make sure that they're incentivized to do a good job. I mean, there's a number of different ways in vetting an operator, but I mean, people can make any deal look amazing. But actually operating the deal is a completely different scenario. So,
100%
to your point. Yeah, to your point, it's all about the jockey, not the horse.
Yeah, absolutely. Are there other things that, that as you kind of talk to investors, other points that, become a point of conversation for you guys to talk about, as far as, whether it's for, lack of a better term, like having control over your destiny or over the deal that you're getting into? Are there any like kind of other points that that you can think of that would be beneficial to know?
Yeah, so I mean, you get to decide, and this is kind of an easy one too, but you get to decide which market that you want to invest in. I mean, I know the Sunbelt Southeast is very hot and a lot of people are investing there, and that is great. But if it doesn't align with your goals and also with your risk tolerance, then maybe it's not the best market to invest in.
Yeah.
I mean, something that we always look for, making sure that the population growth is doubling the national average, making sure that there's a strong diversification of employers, income's growing, low crime rate, landlord friendly states. I mean, there's all these different, I guess, subsections within just analyzing a market, and they're definitely helpful and beneficial. And I know people are always talking about location.
Yeah.
But then people are also doing deals in every single part of the country, just depending on what that strategy is looking like. So I feel like with the market, and then also you can control the type of deal that you're going into as well. I mean, you could go into a development deal. You can go into a self-storage deal. You can go into a car wash deal, ATM. I mean, there's plenty of deals out there, but making sure that that entire deal also fits your criteria and risk tolerance. I mean, there's different business plans that comes within each asset class. There's different ways that these properties are being valued. The financing behind it too makes a huge component to it, especially now as interest rates are rising. You get to decide what type of deals that you want to invest in based on their debt, and based on their debt terms. So there's the market, the deal, and the operator sort of all come in hand, with the operator really just being the overarching point of control.
Yeah, absolutely. I think one of the questions that I get asked a lot, friends, family, others that I meet, it's like I would look at a deal and the question is this a good deal, right? But it's like, I will never answer that question with a yes or no, right? It's like
perfect.
If there was there was ever a time that it depends is a really good answer. I feel like that's one of the times. It's like, I can't answer. That's not a yes or no question, right? Whereas you got to look at all these variables, right? It's so important to just see beyond the shiny, beautiful kind of investor packages that we put together, right? It's like there's a story behind every deal. There's a story behind every operations team, right? It's like those are the digging. That's the digging you want to do before you get into any deal. It's like, to your point, you can make the numbers look any way you want, right? It's like that's really. That should be one of the last things that you look at. My mind, as we're passive investors as well as active, right? So it's like one of the questions I ask, like, who's on the team, right? And how do they operate? Why are they in these markets, right? Those are really important points to kind of keep in mind.
Yeah, agreed. And if you haven't talked, to echo your point, I mean, if you haven't talked to the operator and you just saw the deal, definitely talk to the operator.
Yeah. No, absolutely.
Yeah, I mean, I mean, and this is me on a personal preference. I really like the intimacy of building that relationship with an operator. I know that there are certain platforms out there like CrowdStreet or there's Fundrise where you can just gain a return, but you're not going to have the attention of the actual managing partners calling you, knowing your name, knowing what you like. So
that's right.
It's you got to know the people that you're investing in.
No, that's great. I love that you're through what you're doing, you're building a community, right? I mean, to me that's also as important as well, just because yes, it's a business. We're all getting into an investment together, right? But it's we're building a community, we're building trust, right? Two-way trust, right? That it's really important. I truly believe that we ought to work with people that we like and want to just hang out with, right? For lack of a better term, right? It's like, yes, we're going to be in this for 5-7 years potentially. So let's have that good conversation up front and before it gets too late. So, are there anything else? If not, I've got couple of kind of personal questions for you as well.
No, I think that's a nice, solid overview of just the 4 ways that you can maintain control as a passive investor. So, I mean, if we're just going to go over it, goals, operator, market, type of deal.
That's awesome.
Boom.
Huge. I think it's it's really important for everybody to kind of take those, every step. It could be individual or just kind of dig into them individually, but then at the end, kind of bring it all together. Just, does it make sense for me or not? Right. I mean, that's really important. So.
Yeah. And even, just taking your time with it. Right. I mean,
Yeah.
I know I use this terminology all the time, or I guess this analogy, not terminology, but if you're going on a date, you don't have a checklist of things that you want your date to hit
That's
before
right.
you move forward onto the next date. I mean, you feel them out. There's a lot more
that's right.
than just clicking the checkbox on your
absolutely.
criteria.
No, absolutely. All right.
All right, let's get personal.
Dude, you gotta tell everybody about the Jimmy Kimmel appearance. That's pretty cool. I knew you did some dancing. I just didn't know it was you were a superstar.
Yeah. So the Jimmy Kimmel performance, I met the choreographer taking his class, and then what they do is they typically have select groups at the end, so people that do their choreography in a really nice way and the best way out of the class. And I just happened to be selected for one of those classes. And then after, he talked to me, and so we connected. And eventually, he just ended up giving me a call saying, "Hey, let's go on Jimmy Kimmel Live." And what seems to be the pivotal moment that I was looking for in terms of really breaking off and starting my professional dance career happened to be the catalyst for me to not pursue that anymore and try and be an entrepreneur or work to be an entrepreneur. So with Jimmy Kimmel Live, I made the performance, and I did the performance. You actually can't find it on YouTube anymore. And I was wearing a mask. And if you scroll through my Instagram, you'll be able to find it way down there. But I actually never got paid. I was the only person that wasn't represented by an agent or by an agency.
Right.
And even though it wasn't even that much, I think I got paid. I was going to get paid $1,000. If that could happen on that big of a stage, it could happen in so many different other parts of the industry. And I just didn't like that. And now it just goes back to this idea of control, like trying to figure out if I can control that result. But Absolutely. It just seemed way too risky just to continue down that path and really try to make it work and eventually build a family out of that career. It was just tough, and it just wasn't something that I didn't want to do. Now I did still venture out into other dance related industries, and so I danced with a crew called Chapka's Dance, and they were based out in Fairfield, California, and so I traveled to Ukraine with them before everything went crazy.
Right.
I traveled to Colorado performing, and so I didn't really get paid there either. That was just more for giggles.
I have no idea, dude. Are you? I lost your
go black.
video.
I don't know around which time
You're back.
that happened. You were kind of on, but you were just
crazy
looking at me,
or was I
waiting for something like this, and I was still talking. I was like
staring. So let's keep it going.
Yeah, that's fine.
I'll have my guy.
But anyways, I'll backtrack. And so I was dancing with this crew. I took a couple different routes within the industry. Danced with the crew named Chapka's Dance over in Fairfield. Traveled to Ukraine before it got bad, and then also traveled to places like Colorado and Vegas, just doing random performances. That was for giggles. But this is actually something that not many other people know, is I actually used to mascot, and I almost took it very, very seriously. And so I was my college mascot, and I actually was able to get some gigs off of there. And some of them are actually still up on YouTube. And I eventually my coworkers, friends, college roommate's husband or something like that happened to work for the Clippers and saw me perform at one of our college games. And so I actually ended up working with the LA Clippers as a backup mascot, just helping in training to be their mascot. And I mean, things ended up just not working out, but surprisingly, mascots make a pretty significant amount. So that at the time, the highest paid in 2017, the highest paid mascot was the Phoenix Suns mascot. God. I think he was getting paid probably around 260, 270 per year. Yeah, and then now the highest paid mascot, I believe it's the Denver Nuggets. He's over the 500 range. I think he's around like 560. Yeah, and so I mean they took it very seriously. You would literally insane. You would have to go on to a retreat with your mascot mentor, and you would need to just embody the characteristics that your mascot would have and like the personality that your mascot would have. And so that didn't work. And then the last stint, and this was sort of the end of my mascotting career, I actually was supposed to be the Burger King King. So I'm serious. Like they reached out to me, and I was in my senior year of college. They reached out to me and they asked me if I wanted to be the Burger King King and for their campaigns. And so I got a concussion, not doing mascotting, actually hang gliding. And when I say hang gliding, we really didn't hang glide because we went off and then we went right into the mountain. So we dropped about like 20, 30 feet and I got a concussion there. And so I told him that I couldn't do the Burger King commercials. And so that was sort of the end of all of the gigs reaching out to me. So I guess if you don't see me anymore doing investor relations or anywhere in commercial real estate, you know who called me. No, the Burger King guy.
The Denver Nuggets.
or the Denver Nuggets, sure, that works out. Heck yeah.
Yeah.
Absolutely.
$750,000 a year. That'd be a sweet gig for sure. Yeah. Cool, man. I do want to be respectful of your time. This was awesome. I feel like I could talk to you for hours, and I'm so glad we connected in person, and you've been to some of our events as well. I'm looking forward to attending you guys as well. That's pretty cool. Any kind of last minute notes, or I do want to ask how can everybody
thank you so
get
much
in
for
touch
having
with
me
you,
onto
if you
the
don't
show,
mind.
Sam. And going to your meetups actually was part of also the reason and inspiration behind us starting the meetup as well. And so hopefully we can bring more people into your meetup, and vice versa. Just because it actually is one of my favorite meetups in the East Bay.
Yeah,
I mean, the people that are there, it's focused on multifamily, but you even get into conversations outside of just multifamily, and it's a really nice mastermind and community of just other investors that are all looking to grow. And you know what? I guess that's also something that I also enjoyed as well. Yeah. And I didn't touch on this in the beginning of the conversation, but with being in the single family space, it just seemed very competitive. I mean, granted, there's competition everywhere, but within the multifamily space and the commercial real estate space, granted there is competition, but it's not rare to hear other operators investing in other operators' deals. Like it's a team game, and we're all trying to win and grow together. And so that was one of the other. Yeah. So much collaboration, and it's more of that abundance mindset instead of just trying to fight for that listing and fight for that commission. And so that's also one of the other things that I just really appreciated. But going back to I guess the end of this conversation, love your meetup, love this podcast. Definitely listen to the True Wealth Project. And then if you want to get in touch, you can reach me at, I guess my stuff will be in the show notes, but I can even give out my number and then also email at 925-998-4205. Yeah, that'd be great. And then the, whatchamacallit? Oh, my email, taylor@passiveinvesting.com. And then also, if you want $200 off, we're going to be hosting a conference as well in Charlotte. It's the Multifamily Investor Nation Conference. You can use my code Taylor200. Well, I guess it depends on if this is released by then or not, but Taylor200. Yeah, so it's June.
When is the meetup?
Yeah, June 12th to June 14th.
Just
and so it's just sort of our flagship conference. Yeah, it's gonna be our flagship conference where we bring in all these other industry professionals and you learn about investing in multifamily. Either there's an operator or even as an LP.
Dude, that's awesome, man. I really appreciate your time. I know we're a little over, but like I said, I could talk to you all day. So I really appreciate you coming on and sharing all that information with us and the listeners. So
yeah, absolutely. Thank you, Sam.
Thank you, Taylor, again.
Appreciate it.
I'm sure we're going to see each other here pretty soon.
Talk soon. Bye.
Thanks for watching today's episode of the True Wealth Project, and I hope you enjoyed today's guest as well. If you want to catch more of these episodes, be sure to like and subscribe us on YouTube, as well as other podcast platforms. You can also get in touch with me by following me on Instagram at officialsamcarey, or you can send me an email at sam@aftocapital.com. That's sam@aftocapital.com. See you soon.